welcome to the show, Phil. How are you going?
Thank you, Nigel. Thank you for inviting me on your podcast.
Oh, you're
I'm
welcome.
going well.
I'm glad to have you on the show. Okay, so if you'd like to just give a bit of a brief background of yourself and your career in the retail industry and what you're currently doing at the moment, it'd be fantastic.
Well, I've worked all my career in retail in Australia. So I've had 33 years in retail. I've worked for Big W back in the 90s. I was a buyer there. From there, I went to Vox Retail Group, who owned many uh, brand retailers like Chandler's and Billy Guyot's, Fox Retail.
Mm-hmm.
Um, and it was a national retailer. So I was there for about 5 years in a national bar role.
Right.
And then from there, I moved to Bingley in 1999, and I was there until 2021. So about 22 years at Bingley, 5 or 6 years as a merchandise director, 17 years as a general manager. And I decided to take a bit of a break at the travel, which we did. We had to delay it a bit because of COVID
Yep.
and the restrictions and travel bans and everything else. So we end up traveling in 2022 rather than 2020 and 21. And I was away for about 6-7 months and came back around Christmas. I started my own consulting business in 21, and that allowed me as well to work as a digital nomad while I was traveling, so earning a little bit of an income while I was traveling. And I am still working in my consulting firm at this point in time.
Yeah, fantastic. Thanks so much for that. Yeah, I mean, you've had a very long career in retail, and one of the reasons why I was really looking forward to having you on, because there's a lot of talk at the moment. I mean, this is a retail podcast. Actually, the first few episodes we've been talking about cybersecurity and things because that's been on the minds of people. But now I can see, with interest rates and the current retail environment at the moment, looks like it's moving into what could be considered some pretty tough times. I just wanted to go into, if we could jump straight into it, your thoughts around the current retail outlook in Australia at the moment. I mean, the climate seems to be, 1 minute they're holding off on interest rates, next minute they're endless, seems what is an endless cycle of increases. What do you think of some of these, trends and challenges and potentially some of these opportunities that are currently available at the moment for retailers?
Look, I mean, the last 5 years or 4 years since 2020, what we have seen in general in the economy and in retail in particular is a once in 100-year event. I mean, no one predicted a pandemic in 2020. Nobody predicted the impact and the reaction to that pandemic and the travel bans and the bans from leaving your home and everything else. So the impact of that on many industries has been profound, and I think in retail that impact has been phenomenal. Because what we saw during that period of travel restrictions and working from home and studying from home, and the fact that people really couldn't spend their money on travel or going out, eating out, or anything like that. What we saw is probably the biggest boom in retail that we have ever seen, or well, in my lifetime anyway, my working time. And that boom went on for pretty much about 18 months, 19 months. At the same time, when there was low spending happening in retail, at the same time, because of the pandemic, there was supply restrictions. So there was issues in shipping, there was issues in manufacturing, there was issues in sourcing material. So as such, the demand outweighed supply in a big way, to like to an extent that we haven't seen before, and it led to obviously the inflation, genie coming out of the bottle,
Yep. Yep.
and that inflation started to appear in 21, whereby people were paying more for goods because they just wanted it, and the choice was much smaller because of the high demand and low supply.
Mm-hmm.
And the all the input cost was high, so as
Mm-hmm.
such, inflation kicked on,
Yep.
and um, and in my opinion, the the amount of free money that was pumped into the economies with
Yep.
0% interest rates
Yep.
has led to big spending, and as such, inflation um, went up significantly. And now what we are seeing is that governments and central banks around the world and in Australia are putting interest rates up to try to tame inflation, because
Mm-hmm.
inflation is much higher than what it needs to be. And In Australia, inflation went up to around 8% at its peak.
Mm-hmm.
It needs to be around 2 to 3%. That's what the Reserve Bank policy is. That
Mm-hmm.
needs to be between 2 and 3%.
Yep.
So as such, we've seen 12 consecutive interest rate or 12 interest rate increases in 15 months,
Mm-hmm.
which I don't think we have seen before. And as
No.
such, what we are seeing now in retail is that people are starting now to hold back on spending in retail.
Yep.
And we are starting to see the impact of inflation,
Mm-hmm.
of interest rates going up, mortgages repayment going up,
Yep.
everything else related to that. So as such, yeah, retail is starting to suffer. But at the same time, when you think about the amount of spending that happened during the pandemic period,
Yep.
it is something that that was expected. So the
Yeah.
slowdown that we are seeing now is expected.
Yep.
How long the slowdown is gonna go for, how much it, like how deep is it going to be? It's still early days. I think it's going to be quite significant,
Yep.
and probably more in some industries than other industries or
Yep.
sectors in retail. And definitely the sector that you and I worked in, which is the
Mm-hmm.
appliances and electronic,
Yep.
those categories you have seen a very big boom during COVID,
Yes.
because people were buying
Home office equipment.
office
Yep.
equipment,
Yeah. Working from
computers,
home.
monitors, cameras,
Yep.
TVs, even they were spending money on coffee machines and
Yep.
upgrading fridges and everything else. So,
Yep.
so I think the downturn in that industry is going to probably to be significant, and
Mm-hmm.
it's gonna go for a fair bit of time,
Yep.
and it's gonna impact on retailers out there, no doubt about that.
Yeah. Yeah. Yeah, well, I mean, there's so much going on, isn't there, for retailers at the moment? I mean, I think you spoke about, that it's sort of once in a lifetime. It was a bit of an opportunity for both online retailers and offline retailers and multi-channel retailers as such to capitalize on that additional spending that was going on at the time during the lockdowns and things. And I think that sort of the bit of the post-mortem to that is that a lot of the inventory management systems and things sort of overstocked a lot of retailers as well. So it's a bit of a double whammy too, isn't it? At the moment, I'm hearing that there's quite a bit of stock with within some categories, retail categories, and you've got this sort of contraction going on in spending, and it's sort of like, okay, well, how do you clear this stock out? And it's and it ends up being a lot of reduced margins and a lot of discounting going on to try and keep people spending. And I think one of the stats you told me, this was prior to the podcast, was there was around 1/3 of people are still spending, and those people are the ones without mortgages. But the people with mortgages, as you say, with the 12 consecutive interest rate increases, it's they're the ones that are sort of sitting there counting their pennies a little bit more, considering the cost of homes and things and living and that inflation. So it's a significant challenge for retailers, and maybe it is the you could almost say it is that return again of back in I think it was 20 just before the financial crisis happened. That value conscious consumer that was out there was always looking for discounts, and the rise of sites like Catch and eBay were really cranking at that point in time because people were looking for discounts, and we could maybe see us another cycle of that, given that people are looking for discounts. What are your thoughts about that? And is there opportunities there for retailers to try and bank, some margin and keep turning boxes out of warehouses and so on?
Look, no doubt the issues related to inventory are real, but it varies by retail sector.
Yep.
From what I'm hearing from my understanding in talking to retailers out there, the furniture retailers are probably the ones that have accumulated the biggest amount of inventory
Mm-hmm.
because obviously they saw also an increase in demand during COVID,
Yep.
and their supply chain is much longer. So in on average, I think it's about 6 months from when they order the stock to when they receive it.
Yeah. Wow.
And
Long time.
during COVID, obviously with the restrictions in manufacturing and everything else, they placed big orders, thinking that the
Yep.
demand will continue. Reopening of economies, people getting back to normal. And as such, what happened, a lot of that inventory ended up coming at the same time, arriving at the same time. So suddenly they were overstocked and
Mm-hmm.
demand dropped off significantly. So that industry has a lot of excess stock out there. Other industries may be not impacted so much because their supply chain is on much shorter lead times.
Yep.
But there is no doubt that this period of slowdown in demand is going to see activities get back to pre-COVID levels, where we're going to see significant amount of discounting, significant
Mm-hmm.
amount of impacting to of marketing around discounts and everything else to try to entice consumer to spend. And I'm hearing that really a lot of the spending now is happening when products are discounted.
Yep.
People are not really being buying when there is no discounts, and it's in some categories it's worse than other categories. So I think this is
Mm.
going to impact retail, and it's going to obviously the retailers that have better understanding of their inventory, that manage their inventory better, that have the technology to manage their inventory better, that
Yep.
have a real-time reports on their inventory and sell-through will handle this downturn a lot better than retailers that do not have that did not invest in technology and haven't cannot really be that they don't have the visibility that other retailers do. So as
Yeah.
such, we will probably see that some retailers will get through this period, to trade.
Yeah. Yeah. And do you think that the customer experience is still for a lot of these guys is sort of a bit of a way to keep their customers and lower their marketing costs and try and keep, I suppose, just keep customers in general, because we all know that it's twice as expensive to acquire new customers versus retaining customers. What are your thoughts about a lot of these retailers that have a lot of this stock sitting in warehouses, and the front end of either their website or their in-store point of sale system is not the best in terms of customer experience? What are your thoughts about that?
Look, I think that when you consider the slowdown, it has impacted a bit more on online traders. During the COVID period, people could not go out to the shops, so there was
Mm,
bigger demand on uh, people buying online, and as such, we saw a very big growth in online sales. From what I'm seeing now that the economies have reopened, customers are going back to the shops. They
Yep.
are enjoying the experience going back to the shops.
Yep.
And as such, the pure online retailers are probably seeing a bigger downturn than the
Yep.
multi-channel retailers.
Hmm.
However, those people that have a better understanding of their customers and understanding what their customers want and can target their customers in more with more content that they are looking for.
Hmm.
I mean, obviously, those retailers are going to pick up market share in this environment, and those
Yep.
retailers that don't have the systems to allow them to communicate with their customers in a meaningful way are going to find that they're going to have to obviously leverage the discounting more to try to be able to attract a business in this downturn.
Yeah. Yeah, that's right. Yeah. All right. Well, we might move on to just another topic, and I think this is sort of again sort of goes towards channel growth and moving towards creating opportunities for a business. Sitting there as a general manager or a C-level executive or so on. You're thinking about your cost side of your balance sheet and your revenue side of your balance sheet, and you're sort of going, okay, well, we don't want to cut too much on the cost side because we have to move the stock that's coming in. Then you've got the on the revenue side, you've got, okay, well, how do we open up new channels? How do we potentially do it in a way that is complementary or to the existing business model that these businesses have? And it sort of leads me to this sort of bit of a trend where brands are starting to move towards selling directly to consumers via the online side of things, or specific locations and so on. What what are your thoughts around sort of that sort of that model where brands potentially do have the opportunity to now start selling directly to consumers, where they saw that demand back 2019, late 2019, 2020. People just staying at home, not going in, not discovering their products and services and their ranges so much as via their website. What is your thoughts now that they've potentially built up this kind of audience now? um, you know, Obviously, retailers have an extremely important part of the retail landscape, of course. But I've noticed there's a little bit of a trend towards this, sort of brands going directly to consumers. What are your thoughts around that?
Look, I think your observation is 100% accurate. I think that trend has started many years ago, and
Yeah.
I think it varies by retail sector, but there is no doubt, I think, that when a number of our department stores in Australia have started reducing the service levels in their shops,
Mm.
the David Jones of this world and the Myer of this world 10, 15 years ago, when they started reducing service levels in their shops, I think some of their suppliers
Yep.
started seeing that and probably receiving complaints
Mm.
from customers about the fact that they are not getting the service level that they would like to see.
Yep.
So I think that has encouraged some of those suppliers to look at going direct to
Yep.
those customers and setting up. Initially started with experience centers,
Mm-hmm.
trying to have an
Yep.
experience center where customers can walk into a like an Apple shop or a Samsung shop or a Dyson store or a
Mm.
Louis Vuitton shop or some of the clothing brands,
Yep.
and and they said, okay, well, we will set up experience stores and we will show our full range of products because
Mm-hmm.
again, law retailers pick and choose what they want to sell from a supplier's or from a manufacturer's range.
Yep.
um, So they said, okay, we want to show our full width of products, merchandise, and we want to have experienced sales staff that are trained, that can answer questions and from customers.
Yep.
And also, we want to give them a nice shop with a nice, shopping experience. As such, that trend started with those type of intentions. And I think that from there, I think that trend has increased. Those suppliers saw some success with that. They saw that, okay, if we can avoid paying a retail margin, then we can set up those shops and give the customers what they want, but at the same time improve our profitability.
Mm.
And we saw many of those shops opening around Sydney and Melbourne and other places. And then obviously with the e-commerce and with the popularity of e-commerce,
Yep.
many of those brands decided to set up their own e-commerce sites and sell
Yeah.
direct to customers and
Mm.
bypass the retailer. And so when you look at that now, when you look at the market and the strategies,
Yep.
um, this is part of parcel of doing business. So
Seems to be centered around the customer experience, doesn't it? I mean, if it you know, if it, a good point about the training and product knowledge and understanding. It's during COVID, you've got people coming in and out of your business, your retail business, and then you've got these, as you say, these complaints potentially starting around not having enough knowledge. Um, the online chat is not always a great forum to try and explain to someone, the complexities around a particular product. And these brands normally had better product pages on their websites. They usually had better information. It seemed like a natural progression or a law of process where they would just naturally go, okay, well then why don't we just front load our business just a little bit and say, okay, we'll bring in some people to man some or look after some chat, and then we'll, if anybody has an issue of a particular product. And it forced a lot of these brands to actually pick their game up digitally, didn't it, in terms of the online game? Um, so, I mean, on that point, I mean, there's a lot of really good nuggets in there, Phil. I'd love to dive into a lot of that, but for the sake of time, I just want to kind of move on to just that point of online retail. And obviously, you were there during the growth of Bing Lee at the time, and you saw the business just go from where it was to, I won't say exactly, but it was pretty amazing numbers. Um, what do you think is sort of this next evolution now in terms of the growth and for online retailers, given the current trends at the moment with spending and things? Have you got any nuggets you can provide the audience, or any insights, or any future predictions? That, I know you don't have a crystal ball and won't hold you to it, but what
look,
do you
I
think?
think that the the pandemic and what happened during the pandemic has disrupted the evolution as well of online
Mm,
retail or
yep.
e-commerce, because the growth that e-commerce saw during that period where people could not go out to the shops was much bigger than everybody was expecting.
Yeah. Yep.
Everybody was expecting growth to continue, 5%, 10%, 15%. But during that period, the growth was 50%, 60%, 70% because people
Yeah.
could
Big
not
jump.
go
Yep.
to the
The
shops and
stores. Yep.
buy from the shops. And many retailers as well introduced the uh, frictionless pickup in the shops,
Yep.
whereby you order online and then you give us a time of when you're gonna drive to the shop and we'll leave it for you at the front
Yep.
without us interacting with you, so we can keep that COVID safe distance. So there was a lot
Mm,
that happened during that period. Also, things like the shops were closed, but people were working in the shops. They were receiving customer orders either on the phone or online. and they were packing the goods and then obviously making it available for those customers to pick up without having the shops open.
Yeah.
So all that what we saw during COVID was not something that was predicted before COVID.
I mean, on that point with the click and collect, I remember clearly a number of times I think we had 30-minute click and collect, and a lot of businesses did 1 or 2 hour click and collect. And then, I mean, as soon as the pandemic hit, all of a sudden, everybody was trying to do 15-minute click and collect. It was almost like a race to see how quickly you could get your click and collect, but none of them were actually thinking about the customer experience. They were more thinking about the message, not the actual experience. And one thing we knew is we'd already done the work up front to work out exactly how long it did take, and we had a service level agreement with the customer at the time. And a lot of businesses didn't have the time to do that, and hence why a lot of them were getting complaints and things on Facebook. But that ability to pivot really quickly in the times of a pandemic, I mean, it just goes to show how important it really is to have your online presence. In my mind, um, you know, I wouldn't say to industry standard, because there is no industry standard. It's more about what the customer expectations are and making sure that you're on the path of your customers, because I think a lot of the times retailers don't realize that their customers have moved off the path of where they think they're going. And in actual fact, they've gone on a completely different path altogether. And, they're focusing on trying to get click and collect down to 10 minutes or 5 minutes. But in actual fact, they want something completely different, like a better delivery service or a cheaper delivery service. And going back to the point about retailers making sure that they've got their online presence up to date, I think one of the things we saw during COVID was there was a huge investment in online. And I know a lot of the retailers and heads of and directors in the digital space are under a lot of pressure to try and expand into things like marketplaces and try and get a return back on their business. But I don't think a lot of them have done the actual groundwork to understand, is that actually where the customer's path is at the moment? It's like you've got to focus on what you have and try to make the most of what you have, and get that really singing nicely, and then you move on to the next the next thing. I feel like a lot of it was crammed during the pandemic, a bit like the overstocking and the algorithms. A lot of it from, no one had a crystal ball at the time. We didn't really know what was going to happen. But I think having that ability to be able to pivot quickly and meet the customers with what they're really looking for during these times is super important. Thanks so much for that, Phil. There are a lot of I think opportunities. It's really about focus on what you're doing well. In my mind, from a retail execution point of view, and making the most of what you have in the warehouse, or what you have working really well from a marketing perspective or even a technology perspective. There is a famous quote out there that you focus on the problem you're trying to solve, and the technology and the tools will become apparent to you. And I don't think a lot of businesses actually try and focus on the problems that they're trying to solve. They tend to focus so much on the technology or the tools for their problems. And I think for me, a good tip would be to actually sit down and work out what your problems actually are, and then work on what tools you need to solve those problems. So, all right. So for the second part of the show, I'd like to just go back, if we could, please, just to talk quickly about the macro and sort of microeconomic factors that are in play at the moment. Outside of interest rates and what we spoke about before with the increased inflation and so on, what other issues are you sort of seeing or even potential opportunities, but issues are you seeing at the moment with the economy?
Yeah, look, I mean, from a retail perspective, obviously, you have the downturn in demand, and you have the basically the interest rates and mortgage prepayments,
Hmm.
utilities and everything else that are impacting on customers' ability to spend. So I think for a lot of retailers now, it's really all about understanding their business,
Yep.
understanding their cost base, making sure that their cost base, the relationship between cost and revenue is under control. So if
Hmm.
there is a reduction in revenue, then you're looking at your cost of doing business and making sure that stays in line. with the reduction in revenue to ensure that your profitability is not impacted too much. I think that obviously managing inventory is going to be key in this period. So,
Yep.
as such, those retailers that have invested in technology to be able to understand their inventory and understand, be able to have a real-time view into their inventory and have a good working relationship with their suppliers. They work on shorter lead times. I
Yep.
think those retailers will get through this period much better than those retailers that do not control their inventory as well or have a
Mm-hmm.
much longer lead times
Yep.
with their suppliers.
Mm-hmm.
I think that the other side of it as well is the marketing, and
Yep.
obviously customers will be looking for value now.
Yep.
They will be very much looking at value, looking at your communication with your customers has to be about that, ensuring that if the customer has less money to spend, for example, on a TV, and they can't afford to go and buy a premium TV, then ensure that you have an offer around the budget product to ensure that you have the stock that in the shops, and you don't have too much of the premium goods which are not selling. From
Mm.
what I'm hearing, the premium end of the market has been impacted a fair bit more than the
Yep.
budget end, and now there is probably more focus on private label, for example.
Yep.
I think
Yep.
when you look at the supermarket industry, that you see now that the gap in pricing between a supermarket like Aldi and supermarket like Woolworths and Coles is quite significant.
Yeah, it is. Mm-hmm.
And you read also about management team in Coles and Woolworths saying that there is been a shift in the customer, and
Mm-hmm.
they are now looking for more value, and as such they are also going to be investing in those products to make sure that they are giving customers what they want.
Mm-hmm.
And obviously, the other side of it as well is keeping improving your technology in the business to be able to understand your customer, and data has
Yep.
becomes very important now. Understanding, all the data that comes through your point of sale, you want to understand, you be able to digest it, to be
Mm.
able to communicate and execute a lot better in your business. So I
Mm.
think that really, times are now changing again, and I think those retailers that are more flexible and have a very good understanding of their business and their customers will do a lot better.
Yeah, they'll do
No
well.
doubt
Yeah.
about
It was only just the other day, speaking of Aldi, and I have to say, I love Aldi's marketing. I think it is fantastic. I think they've really absolutely nailed it from the start to even just recently. Some of their commercials are just fantastic. I went there for the first time in a while. My wife shops there, and they've got self-service checkouts now. I don't know
that.
if you know.
Right.
If you know,
Okay. No,
yeah.
I didn't see that.
Yeah, yeah. So they do, and I use them, and I hate them, to be honest. I don't really like them.
Mm.
Because I don't really have a lot in, but they were great. I just went straight through. Yeah, no issues at all. I mean, I've been a big W, and I've had a nightmare with trying to check out with things in and out of it's saying put the
Yes,
item back in, and
labels,
so annoying.
barcodes not scanning. I
It's not
think what
scanning, wrong prices coming up. Yeah, but no,
mm,
Aldi was fantastic. It was really
the other
good.
retailer that actually has introduced self checkout and their technology is a lot better than the supermarket is Uniqlo. I don't know if you've bought
Yeah, yeah,
anything there
yeah.
recently.
Yeah, they use
So
RFID.
the
Mm-hmm.
RFID, so whatever you put
Yep.
in that box that's there, it scans without you having to get the product or the barcode close to a scanner. It scans on its own, and then
Mm.
obviously RFID is the technology they're using.
Yeah, yeah. Thanks very much for that. I think it gives us a really good insight, I think, to where things are headed at the moment. And I mean, only time will tell, of course. Do you have any sort of I don't know, predictions for Christmas? I mean, I know we're still a while away from Christmas, but what's your general feeling about um, you know, the Christmas coming up, and you think it's going to be early with the discounting. Normally, when we've seen this value conscious consumer in the market, and then we see retailers going early on discounts and really trying to own the custom early, where it's more online advertising through Google, display networks and things, and AdWords and all of the other sort of online channels. Um, do you feel that it's gonna drop early, maybe even above the line with catalogs and things? Um, what's your general feeling about it at the
I
moment?
think that the trend that we have seen in the last 5, 6 years is going to continue and
Mm,
probably keep evolving towards Black Friday. I think there is no doubt that Black Friday has
yep.
changed pre-Christmas trading in a big way. The impact of Black Friday has been significant. People are shopping around the Black Friday period, around those 4 days between Black Friday and Cyber Monday,
Yep.
and the spend is quite significant. It
Yeah.
is now probably the biggest trading period in retail.
Mm-hmm.
So, as such, what it's done is brought business forward because of the deals that retailers offer around that time.
Mm-hmm.
And then what we have seen is that pre-Christmas trade is not as significant as it used to be.
Yep.
And as such, law retailers now have to bring inventory early to
Yep.
make sure that they have enough inventory to be able to sustain the demand of Black Friday. And then obviously after that, there is a pause in trading.
Mm-hmm.
And then we see a pickup in the few days before Christmas, and then Boxing Day is another big event.
Yeah. Yeah.
So there
hundred
is no
percent.
doubt that when we look at the slowdown in retail, I think we're gonna see more focus on Black Friday. We're
Mm-hmm.
gonna see that the Black Friday deals will be quite significant, but potentially that would mean that Christmas trade will be quite modest,
Yep.
and as such, there'll be an impact on retail margin because
Mm-hmm.
obviously when you are offering goods at Black Friday, your margin is
And
not
very
the
low.
same.
Mm-hmm.
And then from there we go into Boxing Day, and there'll be another set of discount around that time. So there's no doubt that this year around that period there will be more pressure on the retailer's margin at that
Yep.
time,
Mm.
and I think that the demand will probably be below expectations as well.
Yeah. Yeah. That makes total sense. Yeah, and from a retail sort of media perspective, I know you've got quite a bit of experience on the media buying side of things. If businesses have held out for a little bit, hoping for the business to pick up a little bit, what's your advice to them? Do you think it's, I mean, most of it would be locked in now for Christmas
For
advertising,
sure, for sure.
traditionally, but I mean, online the auctions I think are going to be pretty hot, and Google's going to win that battle. It always does, but um, it's a major channel. Do you think that it's best for people, for businesses to remain a little bit fluid with the situation at the moment with their marketing spend to move that inventory that's been sitting there since that lead time issue with COVID and so on? Or what's your feeling about that?
Look, I think that in retail, when you have a downturn, you have retailers that pull back on their marketing spend, and then you
Hmm.
have retailers that see the opportunity and continue to be aggressive in their marketing and in their
Yeah.
messaging to customers.
Hmm.
I think that in that time when there is less customers on the market, I think you need to be visible. You need to be out
Yeah.
there. People need to see you. They need to see what your offer is and what you stand for. So I think it is important to continue to uh, be active in that space. Obviously, you need to keep to keep things in perspective as
Yep.
far as the relationship between the marketing cost and revenue.
Yep.
But yeah, I mean, my experience is that you cannot pull back too much. You need to be out
Hmm.
there. You need to be promoting aggressively, and you need to direct those customers to your business rather to your competitors' business if they are spending more than you.
Yeah. Yeah. I mean, we've seen that in the past, haven't we? With diminishing returns sort of kicking in, and even it's sort of finding the right balance between spending enough to be seen and heard, and and not spending enough to get a return. Um, it's definitely a fine line, and remaining profitable with all the discounting going on, and the margins and so on. So your trading costs and things, cost of doing business is super important, at that time.
And obviously in that time as well, there's retailers that tend to reduce cost in their shops.
Hmm.
They try
Cut
to
staff
reduce
hours.
inventory
Yep.
and things like that. So again, you
Yep.
got to be very careful there because there's a risk that you could cut back too much.
Yeah.
So it's
100%.
important that you manage through that period,
Mm.
and you make sure that you don't cut back too much.
Yeah, well, that's right. I mean, as you were saying before, the quality of the service, especially during COVID, we saw that drop 2021. All the way through 22, it started to pick up again as people were going back in stores. You start cutting your staff costs at the store level, you then run that risk of having a poor customer experience and pushing people back online again. And if your online presence is poor, you get stuck in this sort of vicious cycle, don't you? You don't you tend to lose customers more than you acquire them. So
No doubt. I mean,
yeah,
we touched on that before when we
mm,
were talking about brands going direct to customers, setting up their
that's
own
right.
shops or their
Yep.
own e-commerce site. I mean, that all started with the retailers that cut back on their service levels, and as such, customers were having bad experience, and
Mm,
those brands could see that, and that's what. Where they invested the money in shops and showrooms and e-commerce. So it's important that retailers maintain their service levels, especially in these difficult times.
yeah. Yep. It's all about remaining sort of dynamic, isn't it?
Mm.
All right, that's great advice. Thanks very much for that, Phil. So we sort of covered Christmas. We sort of jumped to that, but getting back to the macroeconomic side of things, and I mean, just how this sort of downturn that we're sort of seeing a little bit here in the retail, and how long do you think it's set to stick around for?
Look, I think that from looking at at the last 15 months and the interest rates going up 12 times, and now we have had July and August where interest rates have been kept on hold.
Yep,
Inflation is still in Australia, even though it has come down, it's still sitting at 6%, which
yep,
is way above
pretty
the
high.
criteria for the our central bank.
Yep.
My fear is that this period could go for longer because of the fact that the inflation is still high, interest
Hmm.
rates, we don't know if they're going to go up more. I mean, a lot of the economists are still predicting 1 to 2 interest rate hikes, but we've had 2 months where we haven't seen anything.
Yep.
So my prediction is that period of pain or slowdown in retail is going to go for longer.
Hmm.
It's going to be going into 2024, no doubt
Yep.
about that, from
Yeah.
what I can see.
Hmm.
I think that we are not going to see a reduction in interest rates definitely this year, and we're probably not going to see anything in the first 6 months of next year. Um,
Mm.
so I
That's
think that
interesting.
the,
Mm.
the slowdown in retail will probably go well into 2024, and then from there it all really depends on how where inflation is going to be next year. Are we going to see it going back to normal, to that 2 to 3% band, or is it can continue to be high? So
Mm.
I think from a retail perspective, yeah, we are in for a longer period of slowdown,
Yep.
and potentially for most of next year, 2024.
Mm. Yeah, well, I agree with you, Phil. I think sort of you have far more knowledge around the economy and so on, but I can definitely see from a family of six people, with the cost of living and everything that's going on in the moment. I can definitely tell you that it's going to take a while for people to start to build up their savings again as well. And I think that's a significant issue. A lot of people starting to dip into their savings to cover the cost of those interest rates
Mm,
increases, and
yeah,
that's what's leading to those, that one third that do have mortgages out there that are holding back and not spending as much. And I know for a fact we don't sort of spend as much on going out and so on, but we still enjoy ourselves. But
mm,
it's just it's just what you do in these
yeah,
times,
yeah. Yeah, interesting that
Mm,
when you look at the retail figures, restaurant spend is still quite high. It's about
yeah,
36%. So that's restaurant, cafes, takeaway. Still
yep,
about 36% higher than pre-COVID level. So, I mean, as we said before, roughly a third of the households have a mortgage, a third rent, and a third
yep,
are net savers to a certain extent,
mm,
without any big financial commitment. So there's no doubt there is still an element out there
yeah.
of spending, which will obviously make it much harder for the Reserve Bank to bring things back into the target level.
Yeah, exactly. Well, I think we got used to actually going out during COVID, or after COVID. So all of a sudden we could go back out to restaurants, and we've started enjoying that again. And I think it's one of the things that we don't want to cut back. And we saw a lot of the pain that small businesses were going through with their, these beautiful cafes that were with the chairs all stacked up out the front. And I think we all saw those pictures, and it's quite harrowing. Your heart sinks for these businesses because the pain that they're going through. I mean, you can feel it. And now that they're open again, you want to support your local businesses as much as you can. You want to get out there and spend money in the hospitality and as you say, cafes and restaurants and so on. So, but I think it's almost one of the things that would be last on our list to cut back on. I think if if there were if times got a little bit tougher, and I think a lot of Australians still want to make sure that they're supporting Australian businesses and in their local communities and so on. I think it's
There's
super
no doubt
important.
that that element is there, and I think
Yep.
that is spot on, because I think
Mm.
that period of lockdowns where people were not allowed to eat out, I think that's reflected in those retail figures. The
Yep.
fact that people are still spending in restaurants and cafe and takeaway, I think
Mm.
it's really related to
Mm.
that period where we couldn't go out. But I think eventually it is going to get back to normal. There is no doubt about that, with the higher cost of living.
Yeah. Yep. That's right. Fantastic. Okay, Phil. Well, thank you so much for your time and your insights today. It's been great having you on the show. I really appreciate you coming on and having a chat. I'd love to have you back on again at some point. Um, just to let you know, every one of my guests get one of these beautiful mugs. I'll just show
Oh,
you.
very good. Yeah, nice.
So I'll
Look
send you one
forward
of
to
those.
getting one of those.
Yeah.
And thank you again for the opportunity, Nigel, and good luck with everything you're doing.
Thank you so much, and to all the listeners out there, just a reminder for you guys to like and subscribe, as they say. And thanks very much, Phil. And that's a wrap. Thank you.